Oliver, let's leave Mr. Pullman's spacesuit to one side for the moment, which he allegedly, he did give his presentation in this morning, and let's talk about Unilever. And, you know, as an old-fashioned investor, you would have sort of paid up for Unilever in periods of distress when markets were falling or when you thought the economy was weak. And you would have offloaded it when the markets went back to the races, which they did in the second half of last year. But this stock, looking at the share price just now, just keeps on shooting the lights out. Why is that?
Well, it does keep bucking the trend. As you say, last year it did very well, a 20% increase over the year, sort of almost 3 times the rate of the FTSE. And it's because investors are buying into the idea that perhaps Unilever, rather than being a dull, old, defensive consumer goods company of the traditional type, is actually now more of a growth stock. It's certainly, its numbers today back that up to some extent. It's done pretty well at expanding. It's got a long-term plan to increase revenue from about 50 billion euros now to 80 billion over an unspecified time frame. And it certainly seems to be making progress.
I mean, this is not an easy business, and it's not operating in isolation. I mean, it's incredibly competitive. What's it doing right?
Well, what it's doing right is it's got a much greater proportion of its revenues in emerging markets than many of its competitors. Over half of its revenues come from emerging markets with that long-term growth story that we all know so well. So that's a lot of it. And it's also taking its existing brands and expanding them into new areas. It's also been helped to some extent by weakness in the competition. Procter & Gamble particularly had a pretty tough year last year, and that will have helped Unilever. But that kind of thing can't last forever.
And so what do? I look at this thing at 17 times. You know, it's gone up so much in the last 12 months. Is it still worth chasing, do you think?
Well, 17 times looks very high. I mean, it is growing nicely and the results were very good, but it is still a consumer goods company. It sells shampoo and margarine and soap and ice cream and that kind of thing. 17 times earnings is a big multiple. Historically, it's rarely traded above that level for any significant length of time. Over the past 10 years, it's only spent a few months at 17 times earnings or above. That's not to say it's going to fall off a cliff tomorrow, but it's hard to see much more multiple expansion in the shares from here.
And hence the spacesuit, I believe, for protection. Well, that's very interesting wrap on Unilever. Thanks very much, Oliver.